Struggling with your credit score? Is the number staring back at you on your banking app less than stellar? Don't sweat it. With the right tips, you can transform your credit score faster than you think. Let's dive into some proven strategies that have been working and see how you can kickstart your financial health today. Review and challenge credit report errors. Your credit score could be suffering due to errors on your credit report. These range from mistakenly reported late payments to duplicate account entries. According to a survey, about 34% of consumers found errors on their credit reports that could impact their scores. Obtaining a free annual report from Equifax, Experian, and TransUnion is crucial. Scrutinize every detail: incorrect addresses, outdated balances, or loans you didn't open. If you spot an error, file a dispute promptly. The bureaus have 30 to 45 days to investigate and respond. For instance, a Michigan resident recently discovered a misreported car loan, filed a dispute, and saw a 70-point score increase once corrected. Set up Autopay for bill payments. One missed bill can tank your score significantly, as payment history makes up 35% of your FICO score. Studies confirmed that late payments could drop scores by as much as 100 points. To prevent this, automate your bill payments and set calendar alerts. Autopay not only secures timely payments, but also reinforces consistency, a key component of a strong credit history. This strategy is beneficial for recurring bills like utility, mortgage, or loan payments. For added safety, ensure your bank balance can cover these automated withdrawals to avoid overdrafts. Pay down debt strategically. Credit utilization, or how much credit you use relative to your limit, holds 30% weight in your score. The lower, the better. Experts recommend keeping it under 30%. If possible, aim for under 10% for optimal results. The snowball method can give you psychological wins by paying off smaller debts first, while the avalanche method focuses on clearing high-interest debts to minimize overall costs. Financial advisors note that consistent debt payments reduce utilization and gradually build lender confidence. Consider Lisa, who had a $10,000 credit line with $4,500 in debt. Reducing her utilization to 20% through targeted payments boosted her score by 60 points within 6 months. Ask for a credit limit increase. Requesting a higher credit limit can effectively lower your credit utilization ratio without paying down debt. For instance, if your current card has a $1,000 limit and you regularly use $300, your utilization is 30%. But if your limit increases to $2,000, the utilization drops to 15%. Many credit card issuers offer this increase based on income and payment history, perfect for those who've experienced a pay raise. However, watch for potential hard inquiries, which can dip your score temporarily. Major credit companies like Capital One and Chase implemented more user-friendly criteria for evaluating these requests. Handle collections and negotiate. Unpaid debts and collections can stay on your report for up to 7 years, significantly affecting your score. But handling them doesn't have to be daunting. Start by negotiating a payoff or reduced settlement with the collection agency. In 2024, more agencies accepted pay-for-delete agreements, where they agree to remove a collection account once it's settled. This can provide a quick score lift once the debt is marked paid. For example, Jake from Atlanta successfully settled a $1,200 medical bill for $800, and his score increased by 40 points after 2 months. Make biweekly payments. Opting for biweekly payments is a strategic way to improve your credit score while reducing interest charges. This payment method involves splitting your monthly bill into 2 smaller payments made every 2 weeks. The benefit: you effectively make 13 full payments over the course of a year instead of the typical 12. This extra payment gradually decreases your overall debt faster, leading to a lower average daily balance and credit utilization ratio, a key factor that makes up 30% of your FICO score. Financial analysts observed that consistent biweekly payments could boost credit scores by an average of 15 to 20 points within a year. This approach helps borrowers save on interest and reduce their debt quicker, reinforcing their ability to manage credit effectively. Sarah, who carried a $5,000 balance on her primary credit card, decided to switch to biweekly payments after reading about its potential impact. By doing so, she lowered her utilization ratio more efficiently and cut down on interest expenses. Within 6 months, her consistent payments led to a noticeable score improvement, making her eligible for better credit offers and lower interest rates on loans. The biweekly method proved advantageous by easing the repayment process, fostering financial discipline, and ultimately boosting her credit profile. Become an authorized user. Becoming an authorized user on someone else's credit account is a strategic move to elevate your credit score without direct financial commitment. This tactic involves joining a credit card account owned by someone with a strong credit history, which allows you to benefit from their timely payments and low credit utilization. According to a 2024 financial review, participants who became authorized users on accounts with consistent payment records and high credit limits saw average score increases of 30 points within a few months. This strategy gained particular popularity as families and close friends sought ways to bolster each other's financial profiles without loans or complex financial products. To optimize this approach, ensure that the primary cardholder has no history of missed payments and maintains a low balance relative to their credit limit. This ensures that their positive credit behavior reflects well on your report. However, it's essential to discuss expectations, especially concerning the use of the card, to avoid misunderstandings that could impact both parties. Diversify your credit mix. Credit mix, which contributes around 10% to your FICO score, reflects your ability to manage different types of credit. Lenders prefer seeing a blend of revolving credit, like credit cards, and installment credit, such as car loans, mortgages, or student loans. This diversification signals financial maturity and experience in managing varied credit responsibilities. Data highlighted that individuals who introduced an installment loan to their otherwise credit card-heavy profile often witnessed a 15-point increase in their scores over 6 months. However, diversification shouldn't mean taking on unnecessary debt. The goal is to present a well-rounded credit history that can reassure lenders of your reliability. For example, adding a modest personal loan that you can pay off steadily without strain helps create a more comprehensive credit report. Alex, who only had credit card accounts, decided to take a small auto loan to replace his old car. Within a few months of regular, timely payments, his credit profile became more appealing to potential lenders, boosting his score and improving loan terms. Consider a secured credit card. For those new to credit or recovering from financial mishaps, secured credit cards are an invaluable tool. Unlike traditional credit cards, a secured card requires a cash deposit, which typically matches the credit limit. This reduces the lender's risk while allowing the cardholder to demonstrate financial responsibility. Reports noted that major issuers like Discover and Capital One offered pathways for secured cardholders to upgrade to unsecured cards after 6 months of responsible use. To make the most of a secured credit card, use it for small, manageable purchases and pay the balance in full each month. This approach helps establish a pattern of on-time payments without accruing high balances that could negate the card's benefits. Regular, full payments build a positive history that the issuer reports to credit bureaus, incrementally enhancing your score. Jordan, who struggled with a low credit score post-graduation, secured a $500 credit card backed by his deposit. He used it sparingly for groceries and paid the balance off monthly. Over a year, his responsible usage earned him an unsecured credit card offer, raising his score by 80 points and opening up better financial opportunities. Leverage Goodwill letters. A Goodwill letter is a written request to your creditor asking them to remove a negative mark from your credit report due to an exceptional circumstance. It won't always work, but when it does, it's a no-cost way to improve your score. Many consumers found success with this approach, especially if they had previously strong payment histories. Include your account details, describe the situation, and explain why the negative event was unique. For instance, after a brief job loss, Ethan sent a letter to his credit card issuer about 2 missed payments. Within weeks, they removed the marks, and his credit score rebounded by 25 points. And there you have it, proven, actionable steps to boost your credit score quickly and efficiently. Whether you're aiming for biweekly payments or exploring secured credit cards, these strategies will set you on the path to financial health. If you found this video helpful, don't forget to subscribe and hit the like button. Check out our other videos to help you take control of your financial journey.